this afternoon, I'm delighted to welcome Rytis Vitkauskas. I hope I pronounced your name correctly, Rytis.
10 out of 10.
Hooray. And a managing partner at Dig Ventures, and I'm going to hand over to him shortly. This will be followed by the GPs pitching. There will be 8 funds pitching today, and each of those pitches will be 5 minutes, followed by 3 minutes Q&A. So it's going to be short and sharp. So we'll be moving fairly quickly, and there will be a timer that my colleague Zoe will keep us on track with also. So I'm very, very grateful for your participation today. And with that, I'd love to just turn very quickly to Rytis and welcome him to kick us off with our keynote. Thank you so much.
Thank you so much, Farid, and thank you, AQVC team as well, for the opportunity to be here with everyone today. Much appreciated. My name is Rytis. I am with Dig Ventures, a partner there, and also will talk to you today about a topic we all dearly care about, which is operators turned VCs. So we'll talk about operators turned VCs today, which is a topic that is near and dear to ourselves at Dig Ventures. All of us at Dig are converted founders and operators of software companies, and that's really what we mean by operators, executives, founders of companies. So why do we care about this topic, and why do we want to talk about it today with everyone? First and foremost, we want to talk about it because there's so few of us. In the UK, a recent study has indicated we have really only about 8 to 12% of venture capital investors who come from startup or technology backgrounds. And here we're not talking founders necessarily. We're talking anyone who spent some time, in startups and technology companies. And considering most of the investments go into those sorts of areas, we kind of noticed the disconnect and kind of wanted to reflect on that a little bit in today's conversation with everybody. How do we stack up in Europe against our American counterparts? So in the US, there's been a long known fact that many successful founders and entrepreneurs after the exit, turn around and start working as investors. And as it turns out, indeed, at the top tier VC firms, as many as 40% of partners in those funds are former entrepreneurs, and as many as 60% are either founders or operators in startup companies. In other VC firms, the number is a little bit lower, but still close to 30%. So really, the disconnect that we're talking about, is relatively significant. UK call it 10%. And US call it, 30 to 60%, pretty meaningful disconnect. Farid, by the way, I was told there will be a counter on the screen as well for the presentation, which I can't see for some reason. But I'll just continue and raise a hand when I'm approaching 7 or 8 minutes, and then we can still leave a couple of minutes for Q&A if people have some questions. Why else do we want to talk about this topic? We want to talk about this topic because given the lack of meaningful operating experience within the venture capital community in Europe, I guess it's not very surprising that there is a systemic underdelivery in VC performance if you ask founders. So this is quite a lot of data, that comes from our friends at Creandum, who did a fantastic and fantastically insightful study, really looking at how VCs and founders rate their impact on companies. And as you can see, in literally every category other than follow-on financing, founders rate their investor impact as majorly insignificant. This is the gray graph. And you can see that's true across all categories: recruitment, introductions, growth, and general corporate health. We think this is quite interesting, as an insight in and of itself. And obviously, compares very differently to how VCs self-rate themselves on how impactful, they think their contributions to companies are. We also want to talk about this topic because of how the deal selection and the deal winning motions, tend to go down in the market. Again, the same survey by Creandum has highlighted a really interesting statistic that founders effectively end up choosing investors who have the experience and who are easy to connect with. And coming from inside the industry, and of course it comes with a lot of caveats. It needs to be relevant experience, relative sector, et cetera, et cetera. But we in our partnership find definitely in our deal motions that that is an incredibly valuable angle to come at with the founders, especially at those earliest stages, pre-seed and seed stages, when nothing is clear. There aren't any metrics to hang your hat on. And so what do you connect over? What do you believe in? Well, it's easier to bond. It's easier to believe in common things if both the investor and the entrepreneur come from similar backgrounds. So the value proposition, we believe, of operators turned VCs, fundamentally centers around things that are slightly different than are typically pitched, by venture investors to founders. It starts with empathy. Founder journey is long, it's hard, it's incredibly lonely. And we think there's something to be said about having a fund that really understands what, as a founder, you're going through, and has your back, stands in your corner when times are good and when times are bad, and returns your calls when you're going through that third pivot in your journey. Sector expertise to help you see the second bounce of the ball on the journey before it has happened, or an upcoming car crash moment before you're too close to make the necessary changes. The value proposition also centers around the relevant network and the scaling experience. Journey from pre-seed to seed, seed to A to B. Funds try to differentiate, obviously, by stages and by sectors and whatnot. We fundamentally believe that having gone through the experience and operated at large scale, but having started at very small scale, can be a meaningful contributor and a value proposition to the founder, and that's how we approach that at Dig Ventures. So, just to put Dig Ventures on the map a little bit and how it kind of tallies up against what we've just been talking about here today. In Europe, I think we're looking at a relatively interesting and varied distribution of funds as across the two verticals here, the two axes. The vertical one is AUM, so senior management, and the horizontal one is specialist versus generalist. We can't really say operators versus non-operators because, frankly, there's just not enough operators in the market to make that an axis. But the gap that Dig fills is really that specialist operator turned investor with a small fund size, and we'll talk about it all in just a second. Why this team, why our fund size, etc. And we'll have a separate pitch for Dig Ventures as well in a few minutes. But that's fundamentally the void in the market that Dig Ventures fills. We've only been out in the market for a couple of years, but the resonance has been pretty fantastic, and the work that we're doing with the founders has been incredibly rewarding, I think, for everyone involved. Last thing to kind of note, real quick, before turning over to having a quick conversation, to the extent folks have questions here. Past performance is not a guarantee of future success, as they tend to preview in all in financial materials of funds and whatnot. The data on this is really hard to find. So this is the best I could do is looking at one study that effectively dug into the VC's backgrounds, and does it mean that being a founder makes you a better investor? This study particularly would indicate that being a successful founder makes you a slightly more successful investor. Being an unsuccessful founder does not make you a more successful investor. Now, there's just one study, just one data set. And I think, above and beyond what this whole conversation today is about, it's not so much necessarily like, will you definitionally be a better investor if you started a company? No, it's about founder empathy. It's about understanding the journey. It's about being helpful to the founders, to the team in ways that are authentic, that are genuine, and that don't come from a spreadsheet, but rather come from genuine experience. So I think I'm maybe a minute too quick, Farid. You started the counter at 7 minutes, but I think we're kind of at 7 or 8 minute mark here. Very happy to answer any questions if folks have any. So please fire away. And yeah, it was a pleasure presenting this today with you.